Billionaire investor George Soros is about to unveil a new book. It's appropriately titled The New Paradigm for the Financial Markets. It debuts online tomorrow. It focuses on the credit crisis of 2008, what it means for the global economy. In a CNBC exclusive, I spoke with Mr. Soros earlier today about the credit fallout and how it compares with financial challenges in the past. George, good to have you with us. Thank you for joining us.
Pleasure.
Congratulations on the book, and really so well timed for what we're going through right now in the markets and the economies. You call this period the worst financial crisis since the 1930s. Explain. Tell me about it.
Well, because we have had a number of crises in the last 25 years, but each time we got out of it rather easily. The Fed, bailed out any financial institutions that got into trouble, stimulated the economy. I think we've come to the end of the road because you now are threatened not only by a recession, but also by a flight from the dollar. We've issued a lot of IOUs, and there's a reduced willingness on the part of the rest of the world to hold dollars. So you actually have the threat of inflation as well as recession, and that really limits the ability of the Fed to deal with the situation.
Meanwhile, they're out now talking about giving the Fed more power, the SEC less power. What do you think of the latest plan to really change the regulatory environment of the financial structure?
I think it basically misses the point, because what you need is new thinking, not a reshuffling of the regulatory authorities. You see, there is a fundamental flaw in the financial system as we have built it up, because it's built on the theory that markets tend towards equilibrium, that any deviations are random. And all these new financial instruments have been built on that basis. And that is not the case, because there's a two-way interaction, what I call reflexivity, which can be self-reinforcing. And so markets can go to extremes. And in fact, if you don't have financial authorities stopping them from going to extremes, they always do. So extremes of optimism and pessimism. So it's not only you have to control not only money, but also credit.
The book comes online tomorrow.
Yes.
The e-book, yes. And then you've got the actual hardcover book coming out in May. Why did you choose to do e-book over the actual book coming out right now?
Because I think that there is a great need to understand what's going on right now. We are in the midst of the worst financial crisis of our lifetime. And I think people don't really understand what is going on. I've had this theory of reflexivity, which I actually wrote about 20 years ago, and it hasn't gotten serious consideration. So I think this is the moment when I think it ought to be given more consideration, because I think it explains better what is going on.
When we spoke the last time we sat down, that was at the World Economic Forum in Davos, you talked about the bailout of larger banks, that there's a real importance that they do not fail. I want to get your reaction to something that Bernanke said today about Bear Stearns. Listen to this.
With financial conditions fragile, the sudden failure of Bear Stearns likely would have led to a chaotic unwinding of positions in those markets and could have severely shaken confidence.
Do you agree with that? Did the Fed do the right thing?
Absolutely. I think it is absolutely the duty of the Federal Reserve to prevent the financial system from collapsing. And they do need to intervene. And I think we have to recognize that institutions that are in the business of extending credit need to be overseen. There needs to be regulation. Where they have failed is when the bubble was developing. You see, now you have a market, this rather esoteric instrument called credit default swaps. There are $45 trillion worth of these instruments outstanding. That's, to put it in perspective, that's half the household wealth and 5 times the national debt, right? Now, it's totally unregulated. So when you have a counterparty, you don't know whether he is good for his obligation. And you won't know it until you actually have defaults. Now, I think one of the things that ought to be done, and done rather urgently, is to have a clearinghouse or an exchange with a proper structure, with proper margin regulations, where all these contracts have to be registered so that you know what you're dealing with. This is something like a Damocles sword overhanging the market, and it's not going to fall until you have a number of defaults. Now, Bear Stearns would have been that default that would have totally discombobulated that market. And I think it loomed very large in the thinking of the Fed in deciding that they had to bail out Bear Stearns.